What's going on, guys? Today I have a very important video about my trading plan for 2022. I'm going to be going over all of my portfolio, all of the positions that I have, and tell you guys how I'm preparing for the next year with my option trading portfolio. Real quick, if you're new, my name's Henry. I worked for Goldman Sachs and 2 different hedge funds. I graduated with a finance degree from Drexel University, and I'm here to make you stupid rich. So make sure you subscribe to the channel. I do appreciate likes. Now let's jump into the video. The first thing that I want to look at is the Shiller PE ratio. Guys, this is a very important ratio because Robert Shiller, he's a Yale economist. He's very renowned. He's very good at what he does. He's been spot on with multiple predictions, especially back in 2008 during the housing crisis. Now, if you take a look right here on the screen, the Shiller PE ratio is currently sitting at 39.28. If you notice, this is literally the second highest point on the chart since 1880. The only higher point was back in 1999, roughly around 2000 during the dot-com bubble. So currently we're actually sitting more expensive than 2008. Now, again, that doesn't mean that we're going to crash. It just means that right here, if I scroll down, the cyclically adjusted CAPE ratio, which takes into account inflation and earnings, is sitting at a very high point. Which brings me in to this article. US consumer prices jumped 6.2% in October. And to be honest, guys, even though it says 6.2%, the real rates of inflation could be much higher due to multiple factors, such as home building, right? We don't actually see lumber prices and some of the other materials used in house building. So some of the factors in the economy are not even being accounted for. So I think the real rate of inflation could be much higher. I mean, look, it's one thing to look at milk, bread, eggs, food that we consume, but it's another thing to look at housing, to look at how unaffordable the housing market has become. Now, the last thing that you need to understand about inflation, because this is heavily weighing my current portfolio, this is why I'm making so many change in my personal assets, because I can see some of the trouble written on the wall. This picture right here is the currency in circulation. Now, the government can obviously legally print money and inject cash into the economy. However, it doesn't mean that they're not forming a bubble. They can very well be forming a bubble if they're printing too much cash. I mean, we've seen many situations like, take a look at Venezuela, take a look at Greece, take a look at the countries that have not been successful by printing money and not having a stable currency. Now, to me, this is an issue, and this is why some of my positions are the way they are. So let's discuss what I'm holding and what I'm going to be changing for the rest of this year going into 2022. Now, real quick, if you do want to be ahead of the curve, if you want to see how I continuously grow my portfolio, I mean, it continues to rise because I'm able to make money in any environment. Now, I want you to be part of that as well. All you have to do is submit an application for the Discord so you can follow along, learn how to fish for yourself, learn how to trade options and profit. So looking at my portfolio right here, something that you will notice is a new position that I have on Hood. So although I use Robinhood, they have robbed me not once, not twice, probably 3 times now. So something that I'm trying to do in my portfolio, not just in terms of the macro environment, which I want to be a little bit short. I want to sell some more call credit spreads, which, by the way, I'll have a video for you guys in the description below. You can watch how I execute call credit spreads. But this position right here, if I click into it, okay, we're going to take a look at Hood. I have sold a 26/28 calls. I'm currently down just a little bit. However, I'm not worried. The way this position will benefit is if Robinhood stays below $26. And given Robinhood's recent price action, I believe this stock is breaking down. I mean, taking a look at the chart right here, we're down 23.5% over the past month. And if this pattern continues, this position I collected about $700 on for about $1,300 worth of risk. So I'm going to be looking to make about 50% return in the next couple of days on this position. Now, another position I have is PayPal. You guys will see right here in my portfolio, I have the 190 call option. That's because I own the shares. Since PayPal has had a tremendous pullback, I wanted to load up on PayPal because I'm not necessarily saying that we're going to see a crash. However, I want to be in assets that are more on the value side rather than the growth side. Because if we do see a pullback, growth stocks will have a much bigger pullback than some of the value stocks. And PayPal, while not a traditional value stock, if you look at the chart, it has had a tremendous pullback, and I recently entered into the stock. Now, if you guys will notice, I am selling puts on Tesla. This has been my bread and butter for growing my portfolio. This is what I continuously do in the private group. I'm either selling puts on Tesla or I'm doing put credit spreads, which is another strategy that I really love. Now, Apple and Coinbase, what I'm doing here is that I'm selling call credit spreads again, because I want to establish more short positions in the portfolio. Because look, if the market goes up, right, I have a ton of shares in Tesla, I have a ton of stock in Disney and PayPal right now. So if the market goes up, those positions will be benefiting. However, if the market goes down, these positions will be more protected because Disney as a stock has also pulled back tremendously. I mean, if I take a look at the chart right now, you will notice that in the past month, this stock is down 14.73%. Now, again, this stock is breaking down, but I have a lot of conviction in it long term because it's Disney. It's a blue chip company. They have a wide moat in their business, and they're not going to be able to sustain a long-term downward trend because this company is still growing and has a lot going for it. So in the longer term, this chart doesn't really scare me. I know that this is a temporary move to the downside, just like with any blue chip stock that actually has a wide moat around it. So if you notice here, the same goes for Lucid. I sold some call credit spreads expiring on December 17th. I sold 5 of these contracts. I'm up $100 on this position, and this is because I believe that Lucid is trading for a premium right now. Too many investors have a lot of enthusiasm about the stock. Look, again, I'm not against it. If you're a Lucid fan, I'm not here to upset you, but when I take a look at the stock, I don't believe it's going to go past $75 by December 17th. Very similar story here on net, up $235. Let me show you the net chart because I have been very spot on with this play right here. What I noticed about net, to be specific, is that the price to sales ratio was over 100. Now, this is a software-based company. Obviously, they have a lot of good stuff going for them. They are dominating their market, but taking a look at the price to sales just made no sense to me given their growth. So opening up the chart right here, it was going for over 100 times sales at this point. But when I opened up this position around November 15th, I ended up selling the 260, 270 calls. I was very sure that this position would work out, and currently I'm up 81%, $235. My only regret is I didn't open up more contracts on this position. And again, I didn't pick the very top on this stock. However, if you notice here, although the stock continued to run up, I didn't panic. I continued to hold the position. And now my thesis is already coming true. This stock is starting to pull back tremendously, and this position is up. So I made a very good decision picking to sell call credit spreads, or basically having a short position open on November 15th. I did the same thing with Rivian here, 200 and 210. I'm up $585. This is for the same reason as Lucid, Net, Snow, a lot of these stocks that I'm selling call credit spreads on, which also I did on Nvidia. I'm going to show you the Nvidia chart right now. I'm down just a little bit on Nvidia, $885. But again, I'm not very concerned, that I'm going to show you the chart right now using Yahoo Finance. If you look at Nvidia, this stock has obviously a wide moat. You know, they're in the right spaces. They're in artificial intelligence. They're dominating esports. But looking at the company, I think it's just a little bit ahead of its time. I do believe this company is on its way to being a $1 trillion company. But if you look at the chart, it's just a little bit extended for my liking. Now, again, if you actually go back to Robinhood and you take a look at the call credit spread that I have, I sold a 387/400 call credit spread because what I'm doing here is I'm betting that we're not going to see a $1 trillion valuation. Now, if Nvidia is an $822 billion market cap, that's where it's trading at right now, you know, that's fine, but I don't think we're going to see $1 trillion by January 21st, 2022. So for me, this is a safe bet. Although I'm down actually 87% on this position. I'm going to continue to hold for the very same reason I'm going to continue to hold Snow, which I'm up on, Net, Lucid, Rivian, Coinbase. Again, I'm bullish on cryptocurrency. I think the banking system is in a tough position. I think cryptocurrency is going to continue to evolve and become a big part of our economy. However, looking at Coinbase, I don't think that we're going to see $400 per share by 12/17. And then again, I actually opened up this position in the Discord group before I opened up this position. I opened up the 430, 440 call credit spread. And then as my thesis played out, and as Coinbase actually moved lower, I felt confidence to open up a new position at 400 and 410. So this is what I continuously do in my portfolio because I'm trying to hedge the portfolio, guys. The very best investors, you know, like Warren Buffett right now, he's holding a lot of cash, okay? Michael Burry, he has sold out of many positions and he's buying more put options. What I'm doing in my portfolio is very similar to these guys. However, rather than holding lots of cash, rather than buying put options, I'm selling call credit spreads because the nature of a call credit spread is reducing the risk in your portfolio if the market moves down, because when you sell call credit spreads, you're collecting income, but you're also selling delta. You're selling delta because if the market moves up, you will lose money on the call credit spreads. However, if the market moves down or even sideways, then those call credit spreads are going to add tremendous alpha in your portfolio. Now, alpha I haven't really mentioned on the channel. Alpha is when you beat the market, is when you have a greater return than other investors, or you have a greater return than S&P 500. whatever your benchmark is, alpha is what you want to have because that's the return that you're getting above and beyond what you're tracking. Now, again, if you want to see my live moves, my plan for 2022 is to beat the market, do it in a safe way, but also make sure that every single month I can have a greater return than the S&P 500. Also, I do plan to send out some emails to the email list about research that I'm doing on Nvidia stock, on Disney, on Tesla, and other stocks that I'm following. So make sure you sign up for my latest ideas. I will be sending out emails on a regular basis starting in December and going into 2022. Thanks for watching, and I'll see you guys in the next one.